The exact move that we were waiting for yesterday has in fact played out. So in today's show, we're going to have a look at what happens next. And you tell me, are you feeling liberated? And did you say thank you? Let me know in the comments below as well. Vote in the poll section. I'd love to know whether you did actually take the advice that was given on, or should I say non-financial advice, given on yesterday's show, where we did show exactly how that trap was most likely going to play out. You can see over here, we looked at the liquidation levels, and there was slap bang straight into that level. We spoke specifically about that, saying, watch for that 86 to 88K level, and don't be surprised if you get a massive rejection straight from there, because that's exactly what happened, right? Price sweeping the upside liquidity and then getting smacked straight back down over there. And you can see in the 24-hour liquidations, both the longs and the shorts getting absolutely rinsed. You had $231 million worth of short liquidations. That was with the spike up into that 88K region. And then you had $254 million worth of longs that FOMO'd in at that exact level. And I told you not to do that, right? So stay tuned till the end of the show, ultimately, and let's get straight into it, right? If you look at the Banter bubbles now, of course, it's a sea of red because you have trapped longs currently stuck in those positions. And I must say that candle yesterday in the close does make it look more likely that you're going to have continuation, which means that we may just get those lower targets that we've been looking at. And we'll talk about it in today's show, right? We'll have a look at the various different levels. Our bias around this was based specifically on, you know, that potential for the short squeeze towards the upside. We said there is really a possibility. You only have slightly positive liquidation deltas. Now, those liquidation deltas have flipped slightly negative, right? So it's still possibly going to be a choppy environment over here in terms of, you know, the 24-hour liquidations still relatively low, volume still relatively low within the overall market, and rejecting from those key volume areas, right? So let's just quickly see over here. Let's have a look at the 3-day time frame and just see if anything has changed, right? So now the market needs to decide a direction, and that's where you're going to see the next buildup of liquidity. As you can see over the 3-day look back period, you know, there's not much going on over here. You've taken the liquidity, and that's the end of it. Now we need to see what the market's going to do next, and I think it's going to have everything to do with how the rest of the markets open today, later, right? Asia, London, etc., and how their news outlets react to the Trump tariffs, right? Because yesterday Trump came on and basically the market pumped to 88K. And then as soon as they showed on the screen what the tariffs look like for the rest of the world, this is Liberation Day again. That's why I say, are you feeling liberated? You got to love it. You got to love it. And make sure you say thank you. If you're not feeling liberated, it's because you didn't say thank you. That's the problem, right? Okay. Our traders crushing it as well. Of course, in 𝗪𝗏, I definitely want to give a shout out to Josh. 88K leverage at $88,000. He's quite a superstitious person, but he got it. Look at that 214% trade straight away. Perfectly catching the wick over there. Price coming down. We can see if we're going to get that $73,000 target. So if you're not in 𝗪𝗏 and you want to get in for free, easiest way to do that is to go through to our Twitter page. There it is, 𝗪𝗏 Trades with the blue tick over there. Make sure it's got a blue tick. Later on this week, at any point, it could be today, it could be tomorrow, it could be on Saturday, we're going to release a series of codes. Anyone who's following that and sees that code, you'll be able to get into 𝗪𝗏 for free utilizing that. So make sure that you go through over there and do follow the page. All right, let's continue. So looking at the stock market over here, we got the S&P 500 futures chart over here kind of hanging around those lows. It doesn't look very bullish to me despite that little candle over there. Some people that might be trying to be bottom pickers would probably go long off of this, but I would like to see how the rest of the week closes. I think that you could easily cascade down towards these low levels, which means there are some short trade opportunities, right? We're going to have a look at those trades today. There's one long opportunity in the equity markets and multiple different short trades. So we'll see which one's most likely to play out. Ultimately, you just need to have your risk to reward ratios adequate and set up, right? So that's S&P 500. The bias is still that even any bounces that occur from here are probably going to be met with resistance and a lower high until such time as we cascade down into the $5,200 region, which is going to be a key and major support. It is also the target level with 50% of the weekly wick. That's an inefficiency that hasn't yet been filled, right? So we're waiting for that over there. We can look at the QQQ. This is the potential short trade setup that you can take over here in the form of a bear flag, right? You do have a picture perfect bear flag currently forming, strong move towards the downside, a little bit of a corrective move, in terms of the move towards the downside, a little bit of a corrective move into resistance over there, and then you're looking for the next big drop. Usually you get these drops in threes, right? So really only all that you've had over here is drop one. That's your second move up. Then you're looking for drop two, which is the third move down, maybe a small move up, and then possibly even one more further drop down, which would take you into the green box as your ultimate support at about 400, right? So this becomes tradable. How would you take this trade over here? Well, I would specifically be focused on the most recent move that we've had, so we can quickly just map this out using our fib levels over here. So from high to low, we're targeting the 50% or the golden pocket. You can see you've essentially wicked directly into that golden pocket at the 0.618 and 65 level. So perfectly hitting that zone and starting to reject. So theoretically, you could already start to open up the short trade over here, building a short position with the target in mind down to 418. So it's a little bit of a wide stop. All you have to do is utilize a little bit better risk management and not put too much risk on the table. So full invalidation if you do break above that level over there. And this is a favorable risk to reward trade, very favorable, giving you a 3 to 1. For every $1 that you risk, you stand to win $3 on this move down. And I don't think many people will be taking this trade because people are very reluctant to short markets, right? But when the trend is down, you got to go with that. Ultimately, if price does get to the invalidation zone, which would be 495 on the QQQ or NASDAQ, that would also mean that you're reclaiming that 200-day moving average, which is currently rolling over, right? So a very, very sensible trade over here. For any of you that do want to take that, what I can recommend is BTC.C, where you can trade crypto stocks, forex pairs, and equities with a very, very nice crypto user interface, right? You can see over here, very, very similar to what you would experience on a Bybit, right? Where you can adjust your leverage, calculate your risk over there, and enter the trade. Not only that, if you do actually decide to take this trade over here on BTC.C, they're currently running a trading competition. Everything will be linked below over here. You get a 10% cash bonus deposit on anything that you're depositing over there. So you will get 10% on top of what you deposit. And then you can enter into the trading competition where you can win, I believe it is up to $60,000 worth of prizes, right? So $60,000 cash prize over there for trading on BTC.C. Go and check that out. Now, let's look at some of the other trades. Here's the long trade, right? We gave this multiple times leading up to price coming into this parallel channel over here. And we said that, you know, it's probably worth taking the risk, right? It's a worthwhile trade over there. Look at that daily candle. You would have put your entry exactly on yesterday's candle over there, which we highlighted, and a tight stop underneath this candle over here. You immediately want to eliminate that risk. So if you've taken that trade, move your stops into break even. This can also be taken on BTC.C. You can trade Coinbase long over there. And ultimately, I would be watching for any major resistance coming into these key fib levels. So you've had, of course, a pretty big move towards the downside. I would most specifically actually be focusing on the 0.382 because in a downtrend, that's typically where the bears are in control. And you can see that 0.382 lines up really, really nicely with that 200-day moving average, which is moving towards the downside. So ultimately bearish, or at least your final take profit for the bulls would be into that level, which is still going to probably be a lower high. And then ultimately you may start to break this parallel channel, which is moving towards the upside. So that upsloping trend line over there, look for resistance over there. If that does break, then you could move all the way down to major supports, horizontal supports that is first one, 114. And if it gets really serious, you know, you're talking about 67, but we'll cross that road when we get there. I don't think it's important for now. For now, that was the trade opportunity, traded up to here on the Coinbase long. Then we can have a look at Tesla. Tesla would also be eyeing out a potential short trade over here. Remember, this is a strong impulsive move towards the downside. And again, you're looking for weakness over here, anywhere into this 0.382 to the 0.5 level. So if you see something like that, look for weakness over there. I don't expect you to get back above that high at the 0.5. So final invalidation and stop loss can be put above that 0.5. Of course, you want to get into that short trade as close to possible as this level, this order block over here, so as not to take on too much risk. And then you could probably trade this all the way back down to that level over there, right? So similar to Coinbase, which was caught within that parallel channel, this would be the equivalent of Tesla revisiting that line over there. That would take you down on Tesla. It depends on when it hits, but give or take about 173, right? So again, also that is on BTC.C. If you look at our favorites list over here, there it is. We're looking at Coinbase, Gold, Meta, which has actually been in an uptrend. So that is, of course, Facebook, Instagram, etc. We have MicroStrategy, NVIDIA. Theoretically, you could take a short trade on NVIDIA as well. S&P 500, and Tesla. So those are some of the trade ideas that we're looking at, right? I did say, and NVIDIA, you could theoretically take a short trade as well based on any spikes up. I guess we can just quickly map it out since we are here. It won't take us too long. There it is, 0.382. I'd be looking to enter into a short trade over there. Watch for weakness at 122. This is a series of low lows and lower highs, right? Now, again, it's going to be very, very difficult for crypto to rally when the stock market is struggling like this, right? So be very, very, very careful out there. We have seen bull trap after bull trap after bull trap, and this is common and expected when the trend is down. That's why the saying goes, the trend is your friend until the end of the trend. Stop trying to fight the trend, right? Otherwise, you're going to be an enemy of the trend. Rather make the trend your friend, and then you should survive much, much longer in the space, right? And right now, the trends are towards the downside. Look at that massive move. A lot of excitement coming in. Straight rejection from the 3, 9 and 30 moving average over there. So the 3 and 9 rejecting over there. And now we're starting to angle that 30 towards the downside. That's the moving average on the 5-day time frame. And this suggests at minimum, we're probably going to move down into this region over here. So it doesn't look good, right? At minimum, you're expecting a collapse down into this region. And then the question remains, similar to Coinbase, do you get a bounce, right? Do you put in a macro higher low in which the higher time frames still tie in as bullish? It's possible. And I would be playing that, right? That is tradable. We've explicitly said this over and over again. The move down into there is tradable. If it fails, it still probably spikes up over here, forming a lower high around $100,000 or just under. And then that becomes your macro lower high. And then if it is going to lead into a deep bear market, you expect that to break and continuation towards the downside, right? So we trade the market both ways. That's the point over here. But looking over here, I'm trying to highlight any sort of take that I can give you guys in terms of a bullish scenario, because I know most people are, deep out of the money in the red over there, and they're probably looking for some form of hope. This is your hopium case. Your hopium case is that you're forming, almost like a bullish pennant over here, price moving towards the upside, dropping into a falling wedge based on this candle that we had yesterday, which we said was most likely going to be a fake out based on that liquidity grab over there. And that's exactly what we got, has now proven to be the case, which means I'm looking for a drop. It should happen very, very soon. It should happen either over the course of today, tomorrow, or very, very early next week. We're looking for the fall over here, and that drop can happen rapidly. Lower lows and lower highs. But if it is a falling wedge, you want to find that support in this key zone. Remember, we got the fair value gap over here, highlighting this candle on the left-hand side. We're marking out that inefficiency with the horizontal, which matches up really, really nicely with the bottom of that falling wedge. And if we do find support over there and you start to see new volume come in while price starts to move towards the upside, that would be a sign that you probably have caught the bottom, at least for a bit of a dead cat bounce, right? So if that leads to a breakout over here and a lower high, you can offload some. Alternatively, if it's continuation of the bull run, you would still expect a pullback and the next lower high. But at that point, you've already taken the trade over here and you're in the money, right? So that's kind of what we're looking at. That's still what I'm eyeing out over here. I wouldn't blindly set limit orders over here. Personally, I'm going to watch and manually enter into this trade. I want to look at what's happening under the hood, right? Looking at this, at the cumulative volume deltas on spot, on leverage, etc., to see exactly what's taking place within those levels. Should price drop down to here, so you can see clear rejection, clear bull trap taking place over there. We can look at the volume, still lower lows and lower highs. You actually got quite a lot of sell volume. Look at that. Look, big sell volume on that candle over there. So a lot of smart money players probably offloading the last of their coins, rejecting off the high volume profile over there. And we're seeing the same thing over here when we look on this chart. This was the pink box of prosperity that we highlighted. We said you need to get back above that at the very least to become prosperous. And now we've proven that this is in fact your next lower high, right? So we said at the time, this could have been a choppy environment. And therefore we said this level and this level are the key zones that we need to get back above, basically $92,000. Now we can start to lower the bar based on this over here. We said possibly that's going to be confirmed as the next lower high. This candle to me starts to solidify that that's probably the case, which means now we can lower the validation or invalidation to this zone and say if you can get back above $88,000 and sustain price action over there, that would be classified as a break of trend, right? Lining that up with the, at least with the RSI and the daily, you can see that downtrend persists, right? Now, we do have the potential to put in a bullish divergence as long as the RSI doesn't take out this low. So if we can see Bitcoin drop down to $72,000 while the RSI maintains a higher low structure over there, that would be a bullish divergence. That would start to look really, really good. Price putting in lower lows and lower highs with the RSI putting in higher lows, sets in that bullish divergence, then that becomes a at least confluent factor for a buy signal. And then we need to line that up with the weekly time frame to see how does the RSI handle holding this gray box area, right? Maybe we'll change the box over here and we'll make it, let's put it in pink over there so you can see it nice and clear. So that zone over there. If there is any bullish scenario and this were to play out, right? This over here, the falling wedge, we hit this level and bounce out. Remember, while the crash is happening, you might still see the RSI drop aggressively towards the downside. But as long as the RSI on the weekly continues to close above this 44 region, the hope does remain alive, right? So let's say price starts falling to $72,000 right now. Your RSI may do something like this, but as long as the weekly candle closes back above some of those high levels, your RSI may still look like this, giving you that bullish divergence as well. And then once you break that downsloping trend line over there, then you know that there's some more bigger opportunities, at least for a broader swing trade. So the plan remains the same. Nothing has changed over here. The plan has been this. Either we get long based on a breakout and clearance of these key resistance zones, or we get long into the key support down here. It's whichever comes first. While we're in this zone operating over here, it is a bit of no man's land, right? So we gave the AB scenarios yesterday on the show, right? Volume continues to diminish on the 7-day daily exchange. And if you had any doubt that the trends were up or down, use something like the EMA ribbons, which showed very, very clearly rejection into this. We said that was your big resistance to get back above. I think, again, we can lower this now, right? We can lower this over here. By the way, guys, if you do appreciate the analysis, if it has helped you to keep you safe and make you money, please take 1 second out of your day and really hit the like button. It really, really, really helps. You don't even understand how much it helps to get the show content out. So smash the like button over there, right? We need to get back above those zones. Let's quickly see what ETH looks like. Still in a strong downtrend. Look at Sol over there. Strong downtrend. Sui, I imagine that every single coin is going to look like this. Strong downtrend. Hype won't have enough data. Zeta, strong downtrend. Bear chain, not enough price history. Phantom, downtrend, which is now called Sonic. Near downtrend. Cardano in a downtrend. Lithium in a downtrend. Aptos in a downtrend. Atom in a downtrend. Pretty much just like everything. There is nothing that's in an uptrend other than maybe USDT dominance, right? And that's where the party's been. There's always an uptrend somewhere. So if you moved out of Bitcoin and crypto into USDT, well, you've been catching a beautiful, beautiful move towards the upside. So fear and greed, right? It is rising, the fear at least, coming back now to 25. If we do get that move down to 72,000, I would expect that you'll drop into single digits once again. And then I think that becomes your first viable opportunity, right? Looking at the USDT, we were highlighting this yesterday, the bottom trend line over here, which has been rising towards the upside. And we also highlighted based on the fib levels taken from the low of this move where we found support into the high of the move. And we said the 0.382. If we see that we continue to hold that, it does suggest that the USDT dominance is probably going to continue to rise. As this rises towards the upside, you expect Bitcoin and crypto to do the opposite, which means we're more likely to trend towards the downside and find those lower support regions, right? So as it currently stands, you know, still looking for that move into the into the 6.25% region, which should simultaneously drop Bitcoin to like 68 to 72, right? So another viewpoint for the USDT dominance is this, right? The only problem is that you kind of had this inverse parabola, right? A parabola moving towards the downside. When parabolas break, it usually is indicative that you're going to move between 70 and 80%, which theoretically, broken parabola could take you up to 8.5 on the USDT dominance to 80%, you know, would be 9%. That would be pretty catastrophic. At the end of the day, that would basically signal the end of the bull market, right? I will take it one step at a time. Again, I've said multiple times before, it's always possible that the bull run is over, but I'm not willing to call it yet, right? Let's take it one step at a time. And the one step at a time looks something like this, right? We've highlighted over here, previous month's high, previous month's low, you got previous month's mid-range. Therefore, we'll treat this level to level in a range, right? So what I'll be looking for is a possible sweep above this, right? If you see a sweep like that and a deviation of the previous month's high, going back to this chart over here, that would be the equivalent of rising up to that 6.24% level, which is also your midline of that parallel channel, right? So 6.24% level, you could spike up over here, deviate drop the previous month's high, that would be the equivalent of what? Bitcoin probably sweeping the previous month's low, right? So if you see USDT dominance sweep the previous month's high, then you see BTC dominance sweep the previous month's low. In this instance, that would mean a drop down. If it depends how far you deviate, you could deviate out to our ultimate target, that's 72, 73. Get back inside the trading range over there. That opens up the long. Stop loss goes over here, and you trade it back to the previous month's high for a bounce to $76,000. USDT dominance would therefore look something like this. Again, deviation. This is where you move out of the USDT dominance over there, stop loss above, and you trade this down to the previous month's low, and that will create a big flow of money into crypto, into risk on assets, and give you a little bit of relief. And you have to treat it as that, right? Treat it as a relief rally and not as the start of another massive move or bull market or something like that. Take it level to level. If you do want to trade these things, by the way, guys, please have a look at the link in the description below. Bybit offering up to $30,050 in sign-up bonuses. You can use the link in the description below. Probably one of the best places to trade. They got a massive amount of trading volume, rivaling that of Binance, right? So great opportunities over there. And then we can get into some of the altcoins, right? Altcoins are continuing to get smashed against Bitcoin. This is looking at AVAX against Bitcoin. You can see strong downtrend. It doesn't matter which chart you look at. I mean, they're just downtrending, right? They're just falling. And these things can get really brutal, right? That's Solana against BTC, Litecoin against BTC, actually still trying to roll over here, but I'm not too optimistic that's going to hold up. Hype against BTC getting killed. You have Link against BTC about to take out those lows over here. If it does, it could mark down to 807 Satoshis. XRP against BTC was one of the stronger ones, but does look like it's starting to roll over. I mean, it depends when this matches up. You could get this 200, which rises towards the upside over here, meeting up with the underside resistance. Watch for that juncture, right? Possibly you get a little bit of a bounce over there on XRP against BTC. SUI against BTC starting to look a little bit dangerous over here, right? You got the death cross between the 50 and 200 on the daily. Price getting capped at that mid-range. If it does start to lose that mid-range, it could really easily go down at the least to range quarterly, which is about 2,000 Satoshis. And then after that, it's going to go to about 1,200 Satoshis all the way at the bottom over there. All right, what else? What else have we got? Injective BTC, absolutely shocking. Look at that, just terrible, strong downtrend. Aptos BTC hasn't taken out the lows yet, but probably will. This is just a lesson, right? That you want to be in altcoins for short amounts of time, and you want to really accumulate Bitcoin over time. Near BTC, pretty much going into new lows, right? Cardano BTC holding up over here, but probably going to move to new lows. Say BTC already at new lows. Casper BTC, new lows. This is an example of how quickly it can fall apart, right? Casper BTC was once very strong with a beautiful trading range over here, right? As soon as it lost that range, back tested into there. Look at that. It just started to aggressively mark down. You need to look at the significance of trading ranges, right? When you start to lose those trading ranges, things can get really serious very quickly. So Solana, that was one that we spoke about, right? Is this going to lead to a serious breakdown? And right now, it looks much more likely than not, right? I can just imagine how many people got trapped in Solana yesterday. Very exciting, right? Reclaiming the trading range. Things are looking bullish. Monday high has been reclaimed. Immediately smack it back towards the downside. I guess, watch for maybe you sweep the previous month's low and then you do something like that. Great. I wouldn't go long until you actually get the confirmation of the deviation, or until such time as you hit about $77 to $80 over here, which I think at the very least, at minimum, will lead to a bounce, right? The trade over here is not that, you don't buy it over here with the hopes that it's going to the moon. You buy it over there as insurance that if it does bounce, your expectation is it's probably going to do that, right? But at this point, you can eliminate your risk. As it bounces, stops to break even or a slight profit, and now you have a free trade. And if it does go to the moon, amazing. You pretty much caught a free trade. But the expectation is this, right? You probably do something like that, realistically. I know that's scary to hear, but it's the truth. Let's go. SUI, what have we got on SUI over here? SUI is still kind of holding up. You broke this downsloping trend line. There's your previous month's low. I mean, I would kind of use that previous month's low as an invalidation point if you are long on this, because it means if you do break down, you're just confirming that this was a little bit of a trap scenario, breaking this trend line. Bulls got long again and ultimately just bled down. So use that. Try get an entry as close as possible. Even wait for a potential sweep and reclaim, right? If you do something like that, then you can say, no, maybe it's a final shakeout and you're going to continue up. But you need Bitcoin to be healthy for that to happen, right? Really, all you have to do is line up what the rest of the altcoins are doing while Bitcoin hits the identified key levels that we've given below. So that's still the most likely outcome for me. I have no FOMO, not FOMOing into any positions. Look at that, absolutely shocking rejection, right? Even if you look on the weekly, I don't typically use this, but you're getting a cross between the 9 and the 18 on a weekly. We usually use this on the daily. Let's quickly have a look over here, how it was in the prior cycle, right? So you can see similar. Push up, rejection, and then you cascade towards the downside. You put in your final bull trap, and then you lead into the bear market. I'm not saying we're at that point yet, right? I'm trying to give or at least look for any bullish case that I can, right? This is the only thing that I can possibly find right now is the falling wedge that could lead to high prices. All right, another thing that I wanted to touch on is I know that some of you have been asking, not only in Whale Room, but I've even seen in the comments, you're looking for some sort of a neobank. What is a neobank? A neobank is an online digital bank that is crypto friendly. You guys want to at least off-ramp some of your capital. There is something that's coming in the future. Stay tuned. We recently found somebody that we think is really, really reliable in the space as a neobank. So let's see, what else have we got? Let me know in the comments anything else that you want to have a look at. I'm just quickly checking. Let me do a quick scroll through all of your comments over here. Guys, appreciate all the love in the comments as well. It definitely doesn't go unnoticed. Please smash the like button. It really helps us get the show content out. Okay, cool. It's going to be an interesting weekend. I'll say that much, right? Let's see how the markets react today, specifically the stock market. Crypto is directly correlated to the stock markets right now, right? The correlation coefficient is very, very high. We can actually have a look at that. Let's quickly see over here. Let's go on to, we need macro, right? Let's quickly go to macro charts over here. Correlation coefficients. Here we go. I actually want to see this quickly. Let's see crypto and stocks. Let's see, let's just get that to load up. While we wait for that, let me know what else you guys want to have a look at. Hopefully the bear moon saves us. I mean, the bull moon, right? We're in the bear moon now. Hopefully the bear moon gets us to 72. Bull moon comes in next week or so, and then things start to change. Okay, let's compare to, for example, QQQ. Okay, let's go to QQQ. All right, so Bitcoin and QQQ. Let's see the correlation over here. Very, very high, right? You can see sitting at a 1. If this is at a 1, it shows you incredibly, incredibly correlated. If it's at a -1, then it's not very correlated. That's over 60 days. Over 90 days, still at a 1. If we look at 180 days, look at that. Very, very, very correlated. Let's look at 365 days. Extremely correlated, right? So pretty much since, you can say, August of 2022, it's been an almost direct correlation to the NASDAQ. And you can see what our bias is on the NASDAQ. Let me just quickly remind you. And don't forget, guys, you can take this trade, right? That's literally a pretty much picture perfect bear flag over there, which you can take that trade on BTC.C, gain some experience trading the equities, right? Sometimes they're a bit easier to read. For the rest of you, make sure you go through to Whale Room, follow the page over there. We really want to see you, at least some of you on the Twitter page, getting some of the value for free over there, and possibly some of you should win some prizes. So that's it from me, folks. I will see you all on the next one. I hope you have an absolutely wonderful day. Stay safe out there. Do not get wrecked. Wait for the market to show you what's coming next. And I'll catch you on the next one. Have a great day, and cheers for now.